Alaska is often called America's last frontier, known for its rugged beauty, massive wilderness, and cold climate. But beneath this picturesque surface lies another reality: oil. Since the discovery of oil at Prudhoe Bay in the late 1960s, oil has been the lifeblood of Alaska's economy. For decades, oil revenue has provided the state with the majority of its income. The Trans-Alaska Pipeline, built in the 1970s, became a symbol of this oil boom, pumping billions of barrels of oil and billions of dollars into the state economy. Oil revenue has paid for roads, schools, and hospitals. It's funded infrastructure projects that have helped Alaska's population thrive despite the state's remote location and challenging climate. And then there's the Alaska Permanent Fund. This is one of the most unique features of Alaska's oil-based economy. Every year, a portion of the state's oil revenue is invested into this fund, which then pays out annual dividends to every Alaskan resident. For many people, this check has become a critical part of their household income. But with oil reserves dwindling, there's a growing concern. What happens when the oil money runs out? Oil production in Alaska peaked in 1988 when the state was pumping more than 2 million barrels of oil per day. But since then, it's been on a steady decline. Today, Alaska produces less than a quarter of what it did at its peak. Why is this happening? First, the most accessible oil fields are drying up. Prudhoe Bay, once the largest oil field in North America, is now well past its prime. While there are still oil reserves in Alaska, they're located in more remote and difficult-to-access areas, such as the Arctic. Extracting oil from these areas is much more expensive and challenging, and companies are increasingly hesitant to make these investments as global demand for oil shifts. On top of that, there's global competition. Countries like Saudi Arabia, Russia, and even the U.S., lower 48 states, have cheaper and easier-to-access oil reserves. With oil prices fluctuating, companies are choosing to produce oil where it's most cost-effective, and that's often not in Alaska. Finally, there's the global push for renewable energy. The world is starting to move away from fossil fuels like oil and gas. With countries pushing for cleaner, more sustainable energy sources, demand for oil is slowly but surely decreasing. This shift in demand is making Alaska's oil industry even more vulnerable. The decline in oil production has serious implications for Alaska's economy. To understand how big this is, consider that oil revenue has made up as much as 85% of the state's budget in the past. That's how reliant Alaska has been on oil. When oil revenue drops, the state faces budget deficits. And when there's less money to go around, it means public services could be cut. We're talking about everything from schools to road maintenance to healthcare services. Many Alaskan towns and cities rely on state-funded projects to keep their local economies afloat. If state spending is reduced, these communities will feel the squeeze. The Alaska Permanent Fund is also affected. This fund has been a financial safety net for residents for decades. In 2023, for example, each Alaskan received over $3,000 from the fund. For many families, that's a big chunk of their yearly income. But if oil revenues continue to fall, those dividend checks could shrink or even stop altogether. Then there's the job market. The oil industry directly and indirectly supports tens of thousands of jobs in Alaska. From oil rig workers to engineers, from truck drivers to restaurant owners in oil towns, if the oil industry continues to decline, many of these jobs could disappear, leaving people without a reliable source of income. For Alaskans, the future is uncertain. If oil revenue continues to decline, they could face big changes in their personal finances. The state has been so dependent on oil for so long that a transition away from it could be difficult. The first thing that could happen is that residents may need to rely less on the annual dividend check from the Alaska Permanent Fund. For some families, that check is a nice bonus. For others, it's a crucial part of their budget. A shrinking dividend could force people to find new ways to make up for the lost income. And with budget cuts looming, public services may become more limited. Education, healthcare, and infrastructure projects could all see reductions, which could make living in Alaska more expensive and challenging. For those working in the oil industry or related fields, it might be time to start thinking about new career opportunities. The good news is that Alaska is starting to look at ways to diversify its economy. The state can't rely on oil forever, so it's looking into other industries that could help fill the gap. One of the biggest growth sectors is tourism. Alaska's natural beauty, wildlife, and outdoor adventures attract visitors from all over the world. Tourism already contributes significantly to the state's economy, and there's room to grow. Expanding the tourism industry could create new jobs and bring in additional revenue. Another potential growth area is renewable energy. Alaska has abundant natural resources, including wind, geothermal, and hydroelectric power. By investing in renewable energy projects, Alaska could become a leader in clean energy production. This could create new jobs in a growing industry and reduce the state's reliance on oil. Fisheries and mining are also vital parts of Alaska's economy. The state is home to some of the richest fisheries in the world, providing fish not just for the U.S., but for markets around the globe. Similarly, Alaska's mineral resources, gold, copper, and other metals, could play a bigger role in the state's economy in the coming years. For Alaskans, it's time to start thinking about financial security in a post-oil economy. The oil boom that supported the state for so long may be fading, but with careful planning, individuals can prepare for the changes ahead. First, it's essential to build an emergency fund. If dividend checks from the permanent fund decrease or jobs in the oil industry dry up, having a financial cushion can help families weather the storm. Next, Alaskans should consider diversifying their income streams. Whether that's looking for new job opportunities outside of the oil industry or starting a side business, having multiple sources of income can provide stability in uncertain times. Investing in skills and education will also be important. As the economy shifts, new industries like renewable energy and technology may offer new job opportunities. Staying ahead of the curve by learning new skills can make the difference in finding well-paying jobs in these emerging fields. Alaska's oil isn't gone yet, but it's clear that the state needs to prepare for a future without it. This could be a turning point for Alaska, a chance to diversify its economy and reduce its dependence on oil. The transition won't be easy, but it's full of potential. With smart investments in tourism, renewable energy, and other industries, Alaska could emerge from this challenge stronger and more resilient than ever. The road ahead will require adaptability, financial planning, and a willingness to embrace new opportunities. What do you think? Can Alaska's economy thrive without oil? Let us know in the comments below.